Breaking news, and this is from OPEC. This is news that all of the world markets have been waiting for, and it's most interesting on the microeconomics of oil. Adam Szymanski to join us in the next hour, but right now we've got Michael Spence, Lloyd, and Scarlett. Let's go over these headlines on both demand, ugly, and supply.
Well, the supply
uglier.
is not necessarily coming from OPEC anymore. It's coming from outside OPEC countries, notably the United States. The headline here is OPEC says 2015 demand for its crude oil will be the weakest in 12 years. You talked about tepid demand. This is the weakest demand in 12 years, collapsing demand for OPEC's oil. OPEC lowering its projection for 2015 by about 300,000 barrels a day to 28.9 million a day. It's about 1.15 million a day less than what they pumped last month.
I'm kind of surprised to hear OPEC issuing joint press releases. I thought they just disbanded and went home.
It's kind of Saudi Arabia's voice. That's what a lot of people say. It's not really OPEC so much as Saudi Arabia imposing its will upon everyone else.
And Scarlett, the single headline that comes out here, and we can address this with Michael Spence, OPEC raises next year's non-OPEC supply.
And wink, wink, that would be
right?
the United States, too.
Where does it have it?
I don't know, some number that I can't memorize.
I mean, because the U.S. in 2015, according to Adam Szymanski, we're going to have him on later, a million new barrels a day.
This is, Scarlett, please.
No, the Bank of America Merrill Lynch's Francisco Blanche was at a conference
yesterday.
Yes, and what he said was that OPEC has really, in my opinion, dissolved as a cartel. Michael Spence, do you agree with that? That OPEC is not
does Saudi
really
Arabia at the margin, are they still the marginal decider of the price of our oil?
The swing barrel.
I think they are, but, you know, it looks for the moment like they've decided not to do it in the way they did in the past.
I mean, again, to the microeconomics of this, which we don't talk about this enough, of supply and demand. Brendan mentions the United States.
Right.
We have changed the dialogue of the global economy to the point of Lagarde's new mediocrity.
That's absolutely right. I mean, if you just stand back from this, the United States North America is a major net producer, and a lot of these prices were based on, you know, growth in Asia that's not going to be as high as it was.
I stood in our Washington News Bureau with Spencer Abraham the day that the last energy discussion, 8 years ago, whatever, blew up. He was literally in tears, Brendan. He was so angry. But then we didn't have an energy policy, and look what happened.
Well, Michael,
cheap oil.
Is this one of these historical moments where people have to learn how to think about something in a completely new way? We've always thought about oil in terms of demand, and it's fluctuated with demand. We've always thought about it in terms of cartel pricing. Are those just gone? Do we need to think about it in a completely new way?
Well, if you look at the history of oil prices, the standard argument would be that they have to go up over time because of the hoteling argument. Basically, it's an asset. But there was a continuous sequence of positive supply shocks, and the latest one is huge.
We need a trick chart here. This is the dead OPEC bounce. No, that's not today, although it looks a lot like it. That's 1985 to 1988. And Brendan, to your point of what America's doing, this is the collapse of OPEC, and then we just noodled along for 3 years.
I wonder, historically, there was a major agreement in the 20s, too. Oversupply finds its cartel. It might not look like OPEC, but it'll look like something in the future. I mean, can we assume that suppliers will figure out a way to price fix?
Well, that's part of it, but the other part is that the marginal costs, eventually, you know, the price will cut through and limit supply
on its own.
On its own.
Scarlett, intraday on West Texas Intermediate, we went down an immediate 20 cents, maybe 30 cents. Not the drama that you'd expect, but the intraday chart off the Bloomberg terminal clearly shows the weight to oil this morning. West Texas down $1.21, Brent crude.
And you have to think about it in the context of the moves over the last couple of months. We had a little bit of a rebound yesterday, but this is really extending its slump over the last few months.
I mean, I look at this again as a major headline to me is non-OPEC. The fragility of Russia right now. How do you link oil prices into the geopolitics of Vladimir Putin?
Well, it'll hurt him badly, and it's pushed him into the arms of the Chinese because of the geopolitical.
Do you think that dialogue is ongoing? That it's a permanent dialogue, literally going back to what, 1970?
Yeah, I think it is. I mean, China's a net importer. They will benefit mightily from this price decline, and they're still concerned about securing sources of energy supply.
Well, this is the Thomas Friedman theory that bad behavior fluctuates with the price of oil, but we haven't seen that. That he pointed out that Putin has broken this theorem that bad behavior actually increased as the price of oil decreased.
Well, he may have thought he was a little more invulnerable to things like sanctions than he apparently is now with a very low price of oil.